Record again. Guys, here's a candle. This is a bullish candle. It's the one that goes up, the white one. This is the bearish candle. It's the one that goes down, the black one. Cool. That is the easiest you can ever understand it. A bullish candle opens here at the bottom and closes here at the top. All the highs of the candles and the lows of the candles are the same. At both the highs are at the top, the lows are at the bottom, for obvious reasons, right? And now this long tail, it's what we call a wig. That's the long tail. It's because the price failed to push further down and then it closed somewhere here at the bottom. I mean, it started opening up here, it went further down, right? Then it rejected going up, then closed at the top here. So now, even the bearish candle is the same way, you see. Bearish candle, black, bullish candle, white, fine. So, if you don't have this, I'm going to send it to you, right? So now, with candlesticks, the candlesticks, sometimes they have different bodies, as you can see, right? We have the ones that have a bigger body, which shows that the market was volatile, right? Or the buy pressure was a lot. And then here, the sell pressure was a lot, right? Remember, the bearish candles are for a sell, the bullish candles are for a buy, right? So now, and there are candles with long shadows, you see. We have a bearish candle with a long shadow, we have a bullish candle with a long shadow, right? Depending on how the candle closes and how it opens, mostly it's how it closes, therefore we will name that candle, right? Most of these are, they signify like the highest point reached by a market session. Remember, we have the New York, we have the London session, we have the Tokyo session. So sometimes when the session closes, the market will just spike up and come down. You know, like it can spike up and come down, become bearish. Spike down and come up, become bullish. You see, it's because there's a change in volume. You see, the volume of trades that are involved in there most of the time, right? That is called by volatility in the market. Volatility, remember, is the pace or the involvement of the traders in the market. They cause the market to move faster and to be a bit risky, right? So we have candles, right? Now, the candles like this, we call them, it's a one candle. This candle is called a bearish engulfing candle. You can call it an engulfing bar because it's two candles, but then it's called a bearish engulfing candle in that the bearish candle overshadows, right? Overshadows the bullish candle. It can sometimes be equal to one another, or the bearish candle is slightly bigger than the bullish candle. You find out that the bullish candle closes somewhere up here, right? At the bottom, you find out that it does not have a wick, right? And then that results in the bearish candle overshadowing this bullish candle. Therefore, what is that? It's a market rejection. It's a bullish rejection candle. So it causes the market to go down. That is where it will be at the top. Then the market will start being bearish. That's why it's called a bearish engulfing candle, right? To engulf, I believe, is to overshadow, if I'm not mistaken. This is not English, but yeah. So you can even look here. This is an engulfing candle. This bullish candle overshadows the previous bearish candle, you see. And this is also, you can mistake this to be an evening star. The reason why it's not an evening star is because the close of the bearish candle is just above the previous the previous bullish candle, this big bullish candle. So this one has to be bigger for it to be an engulfing, for it to be an evening star. So just take a note. It's a bearish candle, right? It's a bearish engulfing candle. So now we know those two candles, that of which the bearish candle overshadows, we have a bullish, right? We have a bullish. Okay, guys, I'm just quickly coming. I'm going to take something at the gate. That was, I just wanted to get my Alchemist book back. Cool. So guys, I'm back. Bullish engulfing candle. Now I hope you understand. The market was bearish, formed a small bearish bar, followed by a big bullish bar. Therefore, what does it tell us? It tells us that we can expect the market to rise. Right? We can expect the market to rise. Hey, this big bullish candle looks funny. Anyway. Here are the two candles. They are almost in the same position. However, the bullish candle has to be bigger than the bearish candle, has to close above the bearish candle. Just know that immediately after that, you can expect a spike of a candle, right? So yeah, I'm just explaining them, and then you obviously going to go and study by them. Most of the time, doji candles, they have a smaller body. Sometimes they close and open at the same area. So the closing price and the opening price are almost the same, right? They have smaller bodies. These are also reversal patterns. They can occur in both directions, whether it's going up or it's going down. However, it's an indecision, right? That is where you have an equal type market, 50-50. You have 50% selling, 50% buying. So most of the time, it's an indecision and can result in massive reversals, right? Just notice that. Then here's a representation of a doji candle. Here at the top, it can happen during close of a session, can happen when there are market news, or when there's a downtrend or an uptrend that is up and coming, you know. So yeah, just notice it and study it further and try to identify it by yourself. We have another doji. It's called a dragonfly doji. It doesn't have a high price. However, it has a close and an opening price at the same area, but then it also have a low price, right? So just notice it. Mostly it happens for bullish markets. You see, the market comes from being bearish and then it goes to bullish. Look at here as well. We have a doji, right? Then it causes the market to be bearish. This is a continuation type doji. This is a continuation type doji. You see, bearish. Continuation type, bearish. I mean bullish, right? What am I saying? A rejection type, then bearish, then bullish. Continuation type, you'll see the body will be a bit bigger, right? A bit bigger. Another dragonfly. So yeah, you can see your dragonflies, you'll expect them to be at the bottom, right? Then we have another doji, which is a gravestone doji. It looks more like a hammer. You can see a hammer, a 4-pound hammer like this. It looks more like a hammer. The closing price, like you see, that's the difference between the gravestone and the dragonfly. The dragonfly pushes the market up, the gravestone pushes the market down, right? It shows that there is more of a sell pressure than a buy pressure, right? It happens where? At the top. Here, the market was bullish, then there's a gravestone, then the market changed. You can see it's a reversal type. Look at what I keep on saying. When you see dojis beating around the same price range, just expect the market to pull out. It pulls out. You see, it can start with a fake pull out, which we must test the previous support, which is therefore at this price, then a continuation. You see, another continuation type doji. So yes, So guys, I'm not gonna dwell more on candles because I believe you will soon understand them. You can see this is a morning star. The bullish has to be bigger than the bearish, right? And then you have these two bearish candles that are forming each other. I mean, they're following each other. A morning star occurs at the bottom, right? Mostly it's a reversal from a bearish to a bullish market, right? That's a morning star. And then we have an evening star from a bullish to a bearish market. Look at it. This one can be both, right? You can have small bullish, then small bearish, then bigger bearish, right? You must just notice. Can be both. You can see now, we have a small bullish, and then we have a bigger bearish, right? And then still, it's an evening star, right? It's an evening star. I know I'm rushing on candles, but you'll get them, guys. We have a pin bar, or what we call a hammer. Here we have a bullish hammer, right? And then the bullish hammer, obviously you understand, it's a hammer. You pound something towards its direction, right? Pushes up, bullish hammer. Bearish hammer, you also understand it, pushes the market down. So these candles, it's more like you noticing them. A harame, it's the inverse of an engulfing candle, in that the previous is bigger than the new one, right? That is a harame. And then you have another harame, which is called an inside bar. For a bullish market, you can see, let us go back and identify the differences. You see, inside bar, this small one occurs at the bottom, right? And then that one occurs at the top. So you can just see this is a bearish inside bar, first bullish, and then that rejection. You can see, guys, this is also a doji, right? Combined all together, they form a morning star. You see, you just need to notice, but here's a good example. You see, an inside bar, it's a bullish harame, a long bearish movement without a wick, right? And then with another, kind of what do we call this candle? We call it a marumbozu candle, in that it does not have a wick at the bottom, right? Let me go up. I know it seems like I'm rushing. Some candles, you can see this candle, there is no wick here at the bottom. It's a marumbozu bullish candle, right? I'll just, I think this is the one. Yes. See, this candles without wicks. This is a marumbozu bullish. This is a marumbozu bearish. Just notice them, study them, right? I'll share them with you, obviously, but yeah. So guys, I won't be dwelling on candles all the way. It is your duty to go and study them because they are very much exciting. Trust me, they are very, very much exciting. Tweezer button, it's more like an engulfing, right? The tops and the bottoms are the same, right? And then the engulfing is slightly different, right? If it's bullish this side and it's bearish that side, expect a bullish market. If it's bullish, then it's bearish, expect a bearish market, right? So yeah. Tweezer top, you can see if it's bearish, expect a bearish market. In fact, that is what happened today when we bought Nasdaq. Bullish, you can see, expect a bullish market. Bearish, you can see, expect a bearish market, right? So it's what happened today when we decided to buy Nasdaq 100. I can just quickly show you on a 4-hour chart. You can see, no, not on a 4-hour, was it 1-hour chart? There was a formation on an hour chart. No, that's not the one. That's not, okay, that's not the one on a 1-hour chart, but yeah. Bearish, you can see here. It goes into a bearish market, right? And then we have a morning star, right? You can see it's also an inside bar to this one, right? So I'm just trying to show you guys these candles that are very much easy to learn if you'd like. And notice the maximum number of candles that we use is 3. It's 3. Just notice them. I'm sure by now, when I'm busy shading, you can see that is the morning star. That is the what you can see. Others, I'm not doing them because really, there's no need. You guys can see. Yeah, but this one, hey, let's leave this one alone. Yeah, so guys, you can see the candles, you can identify them by yourself, try to see what is going on, what is not going on, and try to reason, you see, try to reason with the candles. You see, for instance, this last candle, we can expect it half an hour. If it's a bearish market, we can expect it to close below. However, this cannot be a major bearish market because this candle, the wick of the second candle, it's much bigger. So the only candle formation that will make sense, it's another candle, it's another bullish candle that is going to form around here. You see, it's another bullish candle that is going to form around here. So we'll see. Yeah. In fact, the market is just rising unreasonably so. Look at it. Look at that doji. Beautiful one for a buy. 15-minute chart. Here we have a morning star. Beautiful buy. You see. So yes, the study of candles is very important and it makes things easier. It makes things easier. Right. So now we're moving away from candles. We are going to start with something called a support and a resistance. I believe most of us we know, right? Support. The reason why I'm coming to this, guys, remember I'm trying to build this into something bigger, right? So a support level is the low price, the low price area of rejection. The reason why I call it a low price or area of rejection or a floor, it's because this is the low level where we expect the market to kind of like, reject. For instance, now I want you to notice when the market goes up, it doesn't just go up and go up forever, right? It goes up and comes down. It goes up and comes down. So where there are 2 or more candlestick rejections, that forms a support. For instance, look at this area. This price here at the bottom forms a support. Next time when the price comes to that area, what does it do? It rejects. It's called a support level. You see, so that's a good representation that I can tell you. It's support level. It's a support level. At a support level, what do we expect? Right, price, right, is expected to rise. Right, we expect price to rise, demand to rise. Right, so what do we do at support? Most of the time we buy the market. Don't go out there and buy the market at the support. No. We buy the market. Right, we expect price to rise. Right, so it's either if the price rises or it rejects. It only rises or it rejects. Right, then it comes and retests and pulls up. So those ones are when we are deep. So we expect price to rise at this area, right? And then we have a resistance. Remember, 2 or more rejections. When I come to this, I'm looking for 2 or more candles. Remember, support can be at around any area, right? Any chart. That's your support and resistance. So your resistance is a high price. High price. Therefore, here we're looking for a sell zone, right? Meaning that there's a lot of supply, high supply, right? And then price is expected to weaken. That is your resistance area, right? Some things to note on the side is previous resistance from a bullish market will become a support for a bearish market. Ramali. What do I mean? Remember, a bullish market goes up, a bearish market comes down. So this is a resistance for a bullish market, right, guys? It's a resistance, this price here. And now this price here for a bullish market is also a resistance, you see, because we're going up. Then coming down, this price, it's on the same price, right? Then it becomes a support for a bearish market, you see. Then we go up, we back at the resistance, we break the resistance, we're coming down, we form a new support, right? A new support is formed around that area. So a support is not, it's not a distinctive level of price where there is always support around that price. No, no, no. You have to look at where there is quite a number of market rejections, like here, reject, 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 you see. So price was going up and then it rejected, came down. Price then going up and then it rejected, came down. And then it started going up again. It forms a resistance, you see. So major resistance, we see them on a 1 hour chart and on a daily chart. Even on a 4 hour chart, we get to see those major resistance, right? Where price quite reject a lot. Like around this area, this is a major resistance. Look, it rejected, it went down. Came back, wanted to break it, then came down a bit and then broken it, then came down to retest, broken it, going up, then came down to retest before it finally went down, you see. So those are the major levels. You need to identify them when you trade them. It's because most of the time when we are at a resistance, we're likely to sell than to buy. When we are at a support, we're likely to buy than to sell, you see. So those are the kind of the quite things that you need to learn before you can apply our strategy. You need to know how to draw your major support and resistance. If I can give you an example, just drawing the support and resistance, you are able to trade. You hear me? Just drawing the support and resistance, you will be able to know when to buy and to know when to sell. Like for instance, around this area, this is a 1 hour chart. We created a rejection zone. We also created another rejection zone, you see. So here we are just waiting to form a market formation here. Then next time when the price comes to this area, we will know what to do. When it goes down, we can expect to buy, you see. When it comes to this area, we can expect a rejection, you see. When it comes to this area, we can expect to buy, you see. Then next time when it goes up, we can expect to sell around this area because we have now identified our support and resistance, which is our area mostly of rejection, right? As we go up and as we're going down, you need to understand those levels. What is my support? What is my resistance, right? So this is different compared to Forex chart. Forex chart like GBP USD, if I were to draw a GBP USD support and resistance levels, here one hit take profit and went up. Talk about analyzing for fun. It hits just one take profit. It failed to hit the second one. Shame. But here it hit. Shame. So now on a GBP USD, you identify support on a daily chart and resistance. That is area of rejection, rejection. You see, as much as you can see 2 or more candles, draw those lines, you'll be fine. Try identifying them, you'll be okay. Because we are on a daily chart. When we take it back to smaller time frame, you'll see what I'm talking about. Right? It's not that difficult. However, it's not definitive of whether you buy or sell. Just know that. You see, we don't make the market behave. The market makes us behave. Right? However, we can notice certain trends. You see, as we go down from this high to a low point, this is a support. Then we expect the market to buy. Unfortunately, it doesn't buy to the resistance. It comes back, breaks the support to another support, right? To another support, then it further goes down to create a new support. Meaning that we can expect that around this area, whenever we're going up, we can expect to reject and sell, because this previous support, which was a support as we were going down, it's now a resistance, which happens where it happens. You can see it happens here. We are selling at this point, going down. You see? Then what do? We go up, we break, and then after we breaking, we come back and retest. Then after retesting, we go up and further break. Where do we go now? We go to another support. Another resistance. You see, you can also check this one. This one is also a resistance. It's a resistance. Look how it break it. It's a small resistance, but yeah, fully break it nicely. Even here, we have an area of rejection. You see, and we have an area of rejection. So yes, guys, you need to understand your level of support and resistance, right? And also try to break it down into time frames. You will see it makes things easier. It makes things easier. Like you can see, this is a double top, right? It's a double top like this. However, because we are at the support, you cannot come and tell me that this is the neckline somewhere here, and then I must therefore sell on the break of the neckline and hope to go to this area. We are at a support, you see. So you must just wait. You must just wait, because the market doesn't really favor you that much, you see. So there are kind of other things to look at. Yeah, really, really, really major things to look at, you see. Once you've identified your support, and it's easy to fall into patterns. Like look at this one. This is an inverted heads and shoulders, right? It's an inverted heads and shoulders. Once we break this area, we can expect to go up, you see. So it just depends on how you view it, you see. Like, you know, here it's a support. When it comes down, it's a support. I'm going to buy at the support, but I must wait for those candles, you see. Most of the time on the reversals, you will see those candles that we spoke about. The reversal candles, trust me, you will see them. They'll tell you stories. Look at the evening star, you see. They will tell you stories, you see. Look at here. Yeah, this is a good inside bar. It's a bullish inside bar. You see, it's a good one. Look at here. It's a bearish engulfing market. You see. Look at here. It's an evening star. So this is a bearish Marubozu followed by a doji. You see. So guys, just study them, focus on them, give it yourself time, ask questions if you have. And then, yeah, I'm going to email you. I'm still going to ask. May you please send me your Gmail email addresses, so that I can send you these videos on your drive. Ladies and gentlemen, if anyone does not have a question, I would like to end the session here tonight. And if you have a question, you can address it right now by unmuting yourself, and then we can attend to you. Otherwise, thank you very much for tonight. Thank you very much. Please learn this. I give you a week to learn this, right? Then once you're done, you can ask me questions. Thanks a lot. Once you're done, you can ask me questions. And then if you need me to emphasize something, we can do that. Then when we come back, the following week, it's gonna be quite hectic because now. Hello?
Hi, Ezra.
Hi, Apiwa, how are you?
I'm good, and you?
Good, thanks. Ish, my voice just changed when I greeted you. Anyway.
Okay. Next time, can you please help me with trader during sessions, those Tokyo,
Okay,
New York, and
okay. We can even do it now. We have 5 minutes.
Okay, that's okay.
Okay. Guys, let's do it this way. So when we trade, I did cover this if I'm not mistaken. Right? Guys, I just suggest now, right? Trade for 4 hours. Trade for 4 hours. Look at the 4-hour candle, how it opens, right? So you trade from H4, right? You look at the 4-hour candle. Okay, I'm just going to write it. Look at the 4-hour candle, how it forms, right? Then look at your H1, look at your M30, look at your M15. Here, try to find, I don't know if I'll be too much, corroborative evidence. Guys, I'm an audit. Find a corroborative evidence. What do you mean? Candlesticks. Right, candlesticks, market patterns. Market patterns and like entry prices, which will support your direction. Like for instance, if you have a double bottom or if you have a double top, someone just typed there. Brother, I have to leave device. No, not a problem. Not a problem, brother. If you have a double bottom on an H4, I can give you an example. Here, you cannot say you want to sell, you want to buy here. No. You have to wait for a candle formation. You see, on that candle formation, go to a 4-hour chart. I mean, a 1 minute, yeah, a 1 hour chart. Try to support yourself, right? Try to find an evidence that, you know what, I can enter the trade right now. Because say now you enter the trade here, it goes into profit, and then it comes down, you start closing, then it goes up, and then it comes down, then it finally takes off, you see. That's not enough, you see. You need to find a direction on a 4-hour chart, scale it down to 1 hour, 30 minutes, 15 minutes to find the right entry, you see. I think I'll emphasize this next time, and then we'll also look at other tools that we can use to find the best entry on a lower time frame, if that's okay. No? So nonetheless, yeah, just try look at it. And guys, thank you very much. I really appreciate it a lot. Right, so yeah, if you need the Nasdaq strategy, you know what to do. 1.5 Nasdaq plus the VIX strategy, right? So yeah, thank you very much, guys. I'm really looking forward to work with you, right? Others, talk on the side if you need any further assistance. Thanks, I'm going to end the meeting. Is that okay?
Yes, it's okay. Thank you.
Okay. Thanks, Kiko.
Bye.
Bye-bye. Bye.